concepts governed by SEBI. Last year, SEBI came out with, I think, 2 standards, one on rumor verification and then another on BRSR. And this year, just recently on 14th Feb of this month, SEBI has directed exchanges to issue the standards on the minimum information that needs to be placed before the audit committee and shareholders in respect of the related party transactions. And on 15th, I believe NSE and exchanges received the put out these standards for the industry and other professionals to use the same. And on a prima facie appearance, it's a very large standard, appears to be very onerous in terms of the requirement. And there are a lot of questions in respect of, because it has a lot of matrices, a lot of different information to be required for different kind of transactions. And the circular will be effective from April 1st, 2025. So today we are here to discuss the nitty-gritties arising out of the standard, what is the need of the standard, and how this standard needs to be read and implemented in order to ensure that right information is provided both to audit committee and the shareholders. And the earlier circular that was issued by SEBI, which now forms part of the master circular, which provides for the information that needs to be provided before the audit committee and the shareholders, will stand substituted by this new standard that have been introduced through ISF, and this will be applicable, as I mentioned, April 1st, 2025. So discuss this today, we have a esteemed panelist with us, starting with Mr. Amit Gupta, who is a regular visitor to our webinars, and he is a practicing company secretary and an insolvency professional. Then we have GP Madan sir, after a long time, founder Madan Law Office, and heads the M&A task force at, and I think M&A task force, he's the co-chair at SOCHM. Then we would be joined by Mr. J.N. Gupta, founder and managing director, Stakeholders Empowerment Services, and Dr. K.S. Ravichandran, managing partner, KSR and Companies, Secretaries LLP, one of the leading company secretaries firm. And then our own Pavan sir, who would today be changing his hat and would be joining as a panelist, and I would be taking the role of both the moderator and the presenter. So, as I mentioned, the standard, I was talking to many of my professional friends. Many of them described that as a bomb on the companies with respect to related party transaction. And nevertheless, it's something which we need to comply. And since it's being recommended by the 3 major chambers, so there is some element of industry acceptance in this process, and that is why SEBI has constituted this concept of ISF. They have also come out with a circular, I believe last week, in terms of how the manner in which the ISF will work, how the committees will be constituted, and other guidelines related to it. So I believe this would now be a longer term way of SEBI of coming out with such standards, which will definitely bring at times a lot of ease in order to read the particular provision of law. Both BRSR and the one which have been issued on rumor verification have definitely add a lot of value and bring a lot of ease in order to ensure compliance of those regulations. So I think while it will take some time to sink in with the requirements, but once we are habitual, this will definitely add a lot of value in terms of the information that is asked companies to present before both the audit committee and shareholders. And I believe with these kind of information being presented to the shareholders, chances would be very less that you will not be able to get through with the resolution before the shareholders, because significant amount of information is now available at your disposal, which was not the case earlier. And now I think shareholders, institutional investors otherwise cannot complain in terms of lack of transparency on these standards, or the lack of in terms of the information that needs to be disclosed to the shareholders. So therefore, I think it would add a lot of value in terms of ease to get the resolutions passed, and proxies advisors, Mr. J.N. Gupta will also be there, will also find much easier to give their comments on such a resolution. So before I start with a brief presentation on what the standard is, let me ask the panelists as to what their thought is in terms of whether they foresee that there was a need of such standards, and how they read the standards to just have their prima facie thought. Starting with sir, if you can share your thought, and then I can go one by one to other panelists.
Okay, thank you, Ankit. It's very onerous task to become the panelist after doing 207 or 8 webinar as a moderator. Okay, so today I have changed hat with Ankit. Now, the reason of changing head is there are two aspects. One is because I was the chairman of this committee, who has subcommittee. Uh, me, Mr. Madan, Mr. KSR, they are the part of the this Indian Industry Standard Forum subgroup, and Mr. Mohandas Pai is the chairman of this our group, and Mr. Kamath is the Industry Standard Forum chairman. So this was a task given. So we were 22 members from the representative of chambers, all three chambers, professional, advocate, uh, and the company secretaries, CFs, chartered accountant, and lawyers. They all were the part of this particular uh, forum. Now, the question is, which Ankit has asked, why this standard? As you are aware, we had a discussion with SEBI, and Industry Standard Forum, when it was formed, they assigned various tasks. And the purpose was two-way. One is there are so many practices, so you standardize the practice and select the best practice, so there should not be confusion to the industry. And industries is suggesting that what should be the perfect way. If you see the human verification standard, it has come out so many new concept also. Accordingly, SEBI changed their law also, and now human verification. Earlier, people were thinking I have to give to all companies all information, so modified with restricted number of newspaper channel, and what is the meaning of main media channel. So many good thing has happened. Now, industry, when they discuss both aspects. They discuss aspects of that why this particular law is implemented, what is the correct interpretation, what industry is understanding, where there is a confusion, how to do it. So the entire group has tried to do its job. It was a 3 to 4 months vigorous exercise which entire group has done day and night. They have done work, and after so many discussion that it was finalized. So whenever there is a any question, Ankit will ask. Amit was not a part of the committee, so they can ask. We can tell you the background behind this. So first background, I will just want to tell you what happened. The proxy advisory firm, they are recommending for various resolution that they should pass or they should not pass. If you see their recommendation, the majority recommendation where there is a conflict of interest is there, that is a RPT. And then when we had a discussion with SEBI also, it has also came out. The SEBI is also saying that the entire which is happening, or some manipulation, some siphoning of fund is taking place, the victim is RPT, or the culprit is RPT. So the related party transaction that is there. So SEBI is very, very cautious. That's why they came out with circular. They mentioned certain rules, which is the basis of this particular format. Then they modified. Now, after modification, they realize that whatever they have mentioned, people are following in the latter part, not the spirit part. So what they have done to make it more spirit oriented, they make the format. Now in the format, you don't have choice. Otherwise, the write-up is written that half empty, half full. You can use both way. So the purpose of this format is that what SEBI wants, it should come in the information. Even though when you are seeing that format, you can interpret multiple things. And then sometimes you are confused also. What is the meaning of this? So Industry Standard Forum has worked out, try to discuss each and every things. Hours to hours discussion has taken place. Multiple people have given their view, and then we have come out. So this is the main background which has come, and I think Madan and Ravichandran can also tell that what is a SEBI, because they was a part of this. So I will request Madan, you also add the why this has come. So when the Ankit will give a presentation, it will be very clearly come out. And Amit, we will ask these questions from panelists from this side. That what is your opinion on this? Madan.
Thank you, Pawan. And first of all, my compliments to you and congratulations to you for steering this subgroup in such a fantastic manner. I know that otherwise also you are a very tough taskmaster that I have already witnessed in our SSB meetings. You don't allow anybody to be able to sleep at night. And in the same fashion, you have got the work done for this subgroup also. And the way that everybody has contributed for time to issue this standard on Valentine's Day. I think it's a Valentine's gift from SEBI to all the industries, to all the listed entities. As you said, Pawan, very rightly, I remember in the very first meeting which the group had with SEBI chairperson, the view of the SEBI chairperson was very clear that behind every fraud in a listed entity, there is one or the other RPT. It does not mean that in every company, the frauds are happening through RPTs. Or every company, whatever the RPTs are, they are not following the law, they are not complying with the law, they are not following the ethics or other moral practices, not like that. Because we have seen some sort of opposition within our group also, that some of the companies were saying that why do we need this standard? The already existing setup is absolutely perfectly fine. That's working fine. All our related party transactions are being routed through audit committee, routed through BOD, routed through shareholders wherever required. All the disclosures are being made, and all this mechanism, the perfect mechanism is in place. So why do we need this? The SEBI chairperson was very clear that it's not that some companies are doing, others are not doing. Actually, SEBI had a feedback. I'm of the view whenever a law comes from the government or from the regulator, it comes only on the feedback of the stakeholders. It comes only on the basis of the practices which are happening in the industry, across the industry. So if some of the companies are following, it's fine. But it was found that majority of the companies are not adhering to the existing practices, and they were complying with the law in letter only, but not in spirit. The tick in the box approach was that. That is what SEBI wanted, to curb these practices, to plug in the loopholes, that whatever related party transactions are happening in the listed entities, no doubt, first of all, they have to go to the audit committee. And audit committee, as we know, that only independent directors are there who have to approve these related party transactions. And how much time is being devoted by independent directors? What sort of information is being provided to the independent directors and to other members of the audit committee? How much time is being given to the audit committee convene its meeting before the board meeting, before the audit committee give its recommendation to the board? It has been found that in majority of the cases, the proper information is not being given timely, it is not being given, and the audit committee is not being given adequate time to go through all that information. For that purpose, SEBI wanted, number one, to fix up the responsibilities of the independent directors and other members of the audit committee. And number two, that they should get adequate information, the desired information, before they take a conscious call to approve a related party transaction. So that is why SEBI decided that whatever possible information is required to be given to the audit committee members to enable them to take a conscious call, it was decided that we should have a robust standard. The independent directors and other members of the audit committee get adequate information, they get the timely information, and the information, once we go through the detailed presentation which will be given by Ankit, we will see that what sort of information now shall be given to the audit committee members as well as to the shareholders before they take a call. So it will not require, no doubt it's going to increase the compliance burden. There is no doubt about that. But on the other hand, it will inculcate the better corporate governance norms and practices in the corporate. You know, after the circular or the notification of February 4, 2025, many of the stakeholders, when they come to know who were the members of this subgroup, oh, acha, aap bhi ek culprit hain. This is how we are being seen as culprits, that who have been part of bringing these standards. But
I
no
can
doubt
understand.
we may be the culprits. But in the times to come, we'll see the fruits of these disclosures, of this information, when the decision shall be taken. And actually that will reflect in the working of the listed entities also. I tell you, the large listed companies who are already following these norms and practices, they are not going to be impacted at all. Otherwise, providing all this information. But the companies which are not providing the adequate information and through also one or the other route, they are being approved by providing minimum possible information, they are going to, for them, it's going to be a tough task. But no doubt, within 3 months, 6 months, or 1 year, they have to adapt to these practices. And I see a bright future for the corporate entities in the time to come as far as the corporate governance is concerned.
Thank you, sir. Thank you. KSR, sir, you can also share your views. I believe you are also the part of the group. I think he's not there. He's
No,
there.
I'm there. I will
Yeah.
just tell you. Good evening, friends, and this is a very interesting program because there are two aspects we are discussing here. One is Bhavan Vijay was the chairperson of the committee, and he has steered this committee very beautifully. And I would say there are a lot of things we have learned in the process, all of us. And there are two aspects of learning. One is aspects of depth of learning on the subject. Another is the leadership attribute, the managerial skills, the way he has taken everyone around. I want to use this opportunity to congratulate him and place my admiration about the inspiring manner in which he has handled this entire subject. Because on the one side, you have the difficulties and intricacies of introducing new regulations when the whole world is talking about EODP, that is ease of doing business. And on the other side, the regulators are coming with a wealth of wisdom in respect of companies which are having certain undesirable, unethical practices, using related parties as a device or conduit for various purposes. For example, if you take the market cap 31 December 2024, am I audible? Ankit
Yeah.
Okay. I was seeing Ankit was saying something.
No, you are audible.
Okay. See, the market cap, if you look at even the 1,501st company is about less than 200 crore, and it goes down below. Therefore, there are practices where certain companies are engaging in for certain purposes which are not going to be visible to the public shareholders. So therefore, the whole driver for the entire program, entire standards is two. One, whether any related party transaction is entered into prejudicially affecting the minority shareholders or public shareholders, driver number one. Driver number two, are we providing sufficient information to the persons who have been called upon to sit in judgment and approve it? Management, audit committee, board of directors, shareholders. Whether a proper information flow is available or there is any asymmetry of information and arbitrage drawn by anybody. Two drivers only, the whole thing. Previously, we had the concept of 188 with certain classes of or categories of related party transactions. We had 186 and 185 financial guarantees, securities, investment. We had 196 managerial appointments and 203 KMPs. Today we have brought through this regulation Materiality thresholds based differences where shareholders approval is required, where material less financial threshold with promoter concern or interest with definition clarity, as well as other RPTs. Then we have again brought two more buckets of balance sheet items, P&L items. Then we have also brought, very interestingly, without prejudice to your omnibus approvals, so that the day-to-day practice, day-to-day running of the company is not affected. Therefore, this kind of a analytical output has come out of this exercise, and fortunately the SEBI was thoughtful enough to give time also, so that 1st April 2025 say this will become applicable. If somebody looks at it very practically, in the whole of the line items, many are supposed to be already available. This standard requires it to be made available to the concerned authorities like Audit Committee or the shareholders. That's all. Thank you.
Thank you. I think you made those 2 points. Those are very important, both minority shareholders and symmetry of information. Amit, you can also share, though you're not a part of the standards, but what you prima facie view the standard.
Yeah, Ankit, I think Pawan sir, Madan sir and Ravichandran sir has spoken a lot about, and I echo the views what had been shared. I agree ki industry has shown some resistance over these standards whenever they had been issued, and I had a discussion with a couple of colleagues as well. But on the personal front, if I have to share the view, and I have always been advocating that any kind of standardization is always in the interest of the entity. Not only it helps the industry, but it also helps the professional who are associated therewith. So when, just imagine a situation when we are doing audits, when we are employed as a company secretary in these particular companies and making a review of these particular transactions, how life is going to be easy when we are assured that these are the minimum documents which are already in place for consideration of approval of these related party transactions. I think not only the independent directors who are primarily responsible for making approval of these transactions, but other beneficiaries are also going to be there, like the professionals who are working in the company or even outside the company. It is going to save a lot of time of an independent director, because now he knows what kind of information will flow in what manner, at which place he will be able to find out what kind of information. So the decision making is not only going to be quick, but decision making is also going to be quite accurate. They will be able to take an informed decision with regard to the related party transaction. I'm not alleging that any independent director up till now was not taking due care, but at times it happens that you are not having adequate information and you give a benefit of doubt and approve the transaction in a favorable manner. Many a times that kind of things may happen. I'm not saying is happening, but there is a possibility because of the lack of adequate information. You are compelled to take a decision in way of considering the interest of the company that the transaction should not stop. But now, when everything will be in a black and white, in a presentable format, I think this is going to help every stakeholder, including industry at large, including independent director, and from the management perspective also, those who are not doing anything hanky-panky, they will be much more eased out, that they will be having a better prospect that their transactions which they are proposing for approval as a related party transaction will be approved in much more easier manner. And also, as I mentioned, the professional like us and the professionals who are engaged in the company, they are also going to be benefiting at large, I think.
Thank you. Thanks a lot. So we'll take the views of Jayan Gupta ji when he will join. Yes, sir, you want to say something?
Yeah, I have one very important point. What is happening? Everybody should understand when SEBI came out with the related party the format, Before that, there was a write-up. Now, what is happening, which Amit has mentioned, that everybody must understand, the audit committee, when you are putting all responsibility, then the question comes to audit committee that what I should ask. Now, management is giving some information and audit committee is taking decision. Now you are putting responsibility on audit committee, and audit committee will decide on a multiple way. Now SEBI has made for this particular thing, say example royalty, say example loan, that these are information you have to take. So you just understand it will reduce the work of audit committee, number one, their tension related to the what I have left out, and simultaneously professional also, those who are working in the company, because they are also confused what I should give, what should I not give. So now in this format you have given. And second is what SEBI is saying. They are saying we are not against the RPT. They are saying we are just asking you disclose and let shareholders should decide. Let audit committee should decide. And then you can move. When Ankit will give you the entire thing, you will understand very clearly. And then whatever questions you have, you please write to on the question box. We will give answer, the logic behind this and what it is there. And simultaneously, if something is grave, something is very serious, something is required some modification, we will pass on to SEBI also that this is the problem which people are saying. And if you can modify certain things, SEBI may consider or SEBI may allow, okay, let's use this, and after some time they will do. Over to you, Ankit.
Okay, so now I'll begin with the presentation, quickly run you through to the standard, and then we'll discuss the key terms. Okay. Is my, I hope my presentation is visible.
Yeah. And Ankit,
Okay.
you are giving presentation in two parts that I also explain.
Yeah, okay. So objective and purpose. So as per the standard or circular, it aims to establish a standardized format and ensure a uniform approach in presenting the minimum information. I think that is what the panelists suggested, that once there is a standard format, you have no ifs and buts to look into. These are the information that is required in this manner, and you have to provide that information in that manner. And I believe in many places where the information is not available, there is a specific provision being made. You can give necessary justification that why that information is not being provided. So the main aspect that the standard cover, or today's presentation will also cover, applicability of the standards, standards for the minimum information to be provided for audit committee and for the shareholders. Applicability of the standards. So let me first give you an overview in terms of the information that has been asked in the standard. So there are two broad categories of information. One is under para A, one is under para B. In para A, there are information which are specifically with respect to majority part of that information is with respect to the related party itself and the entire list of transactions that are proposed to be entered. So if in case of an audit committee, if there is a related party with multiple transactions are proposed to be entered, so para A to A5 will be common for all the transactions that are proposed to be entered with that related party, and that is being proposed to be placed before the audit committee. Then para B have two parts, B1, B2. B1 is applicable across all kind of transactions that will be entered by, that is proposed to be entered. And B2 then asks you relevant information on a specific type of transactions, like B2, sale and purchase, supply of goods. B3, on intercorporate deposits or advances. B4, investments. Guarantee, surety, indemnity or comfort letter. B6, borrowings. B7, sale, lease, disposal of assets or unit or division or undertaking or disposal of shares. And B8 is payment of royalty. So para A is applicable across all transactions. Para B, B1 is applicable across all transactions. B2 contains additional information that needs to be provided considering the nature of the transactions that I've just read. From B2 to B8, there are 7 transactions that are covered and specific information, additional specific information is being asked for these transactions. This is the entire manner in which the information disclosure has been provided in the standards. Then the standards, after providing the detail in terms of what all information is required, then standards lays out further classification in terms of at what level of transaction, what information needs to be provided. So if I go further, it says it divides the category into three transactions. One is a material RPT. That is an RPT which is a material RPT under the LODR regulations, exceeds 10% of the 10% or more of the consolidated turnover, or 1,000 crore, whichever is less. Then there are certain RPTs which, if entered with promoter or promoter group, or in any entities in which promoter or promoter group will be deemed or interested or concerned, if the transactions individually or taken together with other transactions in aggregate, the value exceeds the threshold that have been taken from regulation 30. If that value exceeds that threshold, then this is covered under this nature. And there are then residual RPTs which are neither material, which are not related with, which are not entered with any promoter or promoter group, or any entity in which promoter group are concerned or interested. Then if these RPTs, there is a further threshold of 1 crore rupees or less than 1 crore rupees. So basis these three different transaction threshold, if specific information have been asked. Sir, you would like to add as to what is the reason why these thresholds were provided and why this classification has been done?
Yeah. Ankit, doing this, let me just explain to everyone. Now, what is happening? Earlier, there was a two category, material RPT and other RPT. So in the material RPT, you have to have 10% or 1,000 crore, and it is going to shareholder. That is very clear. So any transaction you are doing with anybody, which is a related party. But in the related party, there are two types of people. One is the promoter entity, one is the non-promoter entity, like joint venture. Like you have a subsidiary company which is not promoter's interest is not there. So SEBI was more concerned, and the SEBI's data was also about this, that they were not bothered about the RPTs of non-promoter. They were more concerned about the RPT with the promoter. And they were also mentioning that wherever they have found orders, wrong thing, it is majority connected with the promoters and promoter group. Now, in this case also, there is a very interesting conversation that started. When we came out with this particular point, so we divided the less than material transaction into two parts. One is promoter driven and non-promoter driven. Okay, but both are RPT. In the promoter driven also, there is any interesting fact came that this 2%, 5% limit also prescribed. So any transaction which is 10%, it is going to the shareholder, and any transaction less than 10%, it is going here. But here also, because the industry, there was a demand that the transactions are more in numbers. Okay. So how you will do this? It means every transaction. So that's why this 2%, 5% limit came in this. Okay. So this is one aspect. Next aspect was this, that if the promoter driven transactions are not there, then what will happen? And then residual RPT also came. So in the residual RPT, so this 2%, 5% that is there, but industry asked that we have a multiple transaction of amount. So it means 10,000 rupees amount, I have to give entire thing. 50 lakh rupees transaction, I have to give entire thing. So that's why SEBI has put in that less than 1 crore or more than 1 crore. So if the transaction is less than 1 crore, so they divided into various category, and then they came out. Ankit, you just explain the next slide, then I will explain to everyone. Yeah.
So I think before, let me give overview in terms of this is the applicability matrix. So I've showed you the threshold in terms of RPT, RPTs with promoter groups, or residual RPT. So then there is a applicability matrix So as per the applicability matrix, it says if it is a material RPT, it has to be provided. There is no threshold. There is already a threshold under Regulation 23. If it is a balance sheet item or a P&L item, both in all the cases, it requires approval of audit committee shareholders. All comprehensive disclosure has been identified. So comprehensive disclosure means the entire table that is there as part of the standard needs to be disclosed to the stakeholders or the audit committee or the shareholders. Then other RPTs in which promoter or promoter group are interested, or it is with promoter group, then if that threshold, the transaction exceeds the threshold, then in case of audit committee, all comprehensive disclosure is required. In case the threshold is less, in case of balance sheet items, comprehensive disclosure is required. In case of PL items, limited disclosures are required. So limited disclosure means comprehensive disclosures except disclosures with respect to obtaining bids, disclosures with respect to asset liability mismatch data in case you are doing an investment or giving a loan, disclosures with respect to peer review, other things if you're giving a data with respect to royalty. So there are certain exclusions. Then residual RPTs, 1 crore limit, less than 1 crore limit. If it is more than 1 crore, exceeding 1 crore, then there is no comprehensive disclosures are required, only limited disclosures are required. And it is less than 1 crore, then it is only minimum disclosure. So there are 3 categories of disclosure: comprehensive disclosure, which covers everything, and limited disclosures, which reduces certain thing from comprehensive disclosure, and minimum disclosure is only very key information about the related party and the transaction that is being asked. That is how the disclosure is required to be made to the audit committee and to the shareholders. So now coming to the balance sheet items and the P&L items. So balance sheet items are those items which impact the balance sheet, like loan, deposits, investments, guarantee, surety, borrowings, disposal of assets, disposal of any units, sale of shares. All these items are there, which forms part of the balance sheet. Any change impacts the balance sheet. Then P&L items are sale, purchase, supply of goods and services, and payment of royalties. So this is how the transactions have been divided: balance sheet items and P&L items. Then
Here,
yeah. You want to add anything?
Yeah. For this, friends, there was a very interesting point also. The SEBI is saying that we are not bothered about the P&L items much, because they are saying P item, when you are doing, it will reflect in your quarterly results. So their main concern was balance sheet item, which is hiding under the table. So they are mentioning that these are the investment, you can merge, you can do this, but P&L item, it is reflected in the P&L. So that's why they gave it 2 categories: balance sheet item. So for balance sheet item, I'm not giving any relaxation, but P&L item, they are giving relaxation, which you see, even promoters transaction less than limited. This is less than 1 crore. They are saying minimum disclosure and or limited disclosure, and then the transaction with non-promoter group, and if the transaction less than 1 crore rupees, they are suggesting minimum disclosure. So there are 3 definitions they have come out: comprehensive in all, limited is all the information which are there, they have given relaxation that this will come to limited, and then minimum disclosure that is also further reduced from the limited disclosure. So their concern was clearly mentioned that in less than 2% threshold, if this is a P&L item, then you can give limited disclosure, and then remaining all transaction residual, because that is less than 10% to 1 crore. So if it is exceeding 1 crore, limited disclosure; less than 1 crore, minimum disclosure. And this has come out because they were saying that so many people are doing 50 lakh, 20 lakh, 30 lakh rupees transaction, and for that you have to give everything. So SEBI agreed on this part, that minimum disclosure for non-promoter entity, you can further dilute the limited disclosures and give minimum disclosure. Over to you.
Okay. So I'll also go back on as to the manner in which, how the entity will be identified in which promoter group has a concern or interested. So if you see the reference of actually subsection 2 of section 184 has been taken to determine how an entity will be deemed to be interested, or in which promoter group is deemed to be concerned or interested. So if it's a body corporate where promoter group holds more than 2% of the shareholding or voting rights, and or is a promoter, managing director, chief executive director of such a body corporate. So in case an individual, if it's a body corporate promoter, it cannot be a managing director, so it has to be read in the context of individual. Whereas a person is a firm or other entity, the promoter group is a partner, owner or member. So in this manner, you will identify the persons in which it will be said that the promoter groups are deemed to be concerned or interested, and then that has to be read in terms of the disclosure metrics outlined in the standards. Now coming to
you can ask Ravichandran's view also on this, because he has suggested some certain disclosures limitation.
Okay, sir, you can share your views. Ravichandran, sir.
Yeah, this is on the applicability matrix.
Yes, sir.
You will be able to see in the second, you can say, category.
Yeah, promoter
group. Two important thresholds have also to be met, as well as there should be promoter or promoter group having any concern or interest. So there are two, we can say, criteria, and if both are met on the basis whether financial thresholds it is more or less, and again on the basis balance sheet or P&L, comprehensive or limited disclosures have to be given. Another thing is where the promoter group is not concerned or interested. Simply one liner is, you have to remember, this does not bring any great burdensome additional task, obligation or disclosure requirements, except what was previously there under the first category of material RPT, which goes to Audit Committee and shareholders. So where the promoter or promoter group is not having any concern or interest, and transactions are between associates and joint venture, subsidiary, collaboration, etc., much relief has been given already without affecting the EODB. Therefore, if the listed company were to look at it in totality, only if concern or interest is there, then alone you need to look at these thresholds. Otherwise, it comes residual RPT. If you come, the disclosures are already either it is limited disclosure or it is minimum disclosure. This is how I look at it. The matrix has been devised in such a way that there is a single line item of see whether promoter is concerned or interested. That is what drives the whole matrix and the requirements of comprehensive or limited disclosure. That's all.
Sir, Vijay sir, there was a question that we received from the participants, that in both these threshold, whether it's an RPT with the promoter group or residual RPT, for the purpose of threshold, we have to aggregate all the transactions that are proposed with a related party or only an individual transaction. Because in residual RPT, it uses the word transactions with related individually or taken together. But similar language had not been used in the transactions which with respect to the promoter group.
It is correct only that the matrix is very clearly stating transactions to be entered into individually or taken together with previous transactions during a financial year.
Okay.
So if you are approving in April, the financial year will be, for example, 25-26. First time you are proposing an RPT for approvals. There is no question of any transaction already entered into.
Yeah.
Mostly it won't be there.
Okay. So, but if there are 3 transactions on an aggregate basis, they breach the threshold, I have to give the disclosures in all the 3 transactions.
Yes, because the purpose of disclosure is to ensure that despite knowing promoter has a concern or interest, the audit committee finds that the transaction is in the interest of the company and there is no disadvantage or it doesn't prejudicially affect the public shareholders.
Okay, thank you. Madan sir, you have any views?
I concur with Dr. K.S. Ravichandran.
Okay.
And
Amit?
secondly,
Yeah, yes, sir.
Ankit, I have a view.
Hmm.
Today, I am expecting lots of queries.
Hmm.
And it may run to tens and hundreds. If I request you that if you can collate all these queries,
Yeah.
then we can prepare FAQs on these queries and then circulate with all our professional friends. It will be really very, very handy document for all of them.
Definitely, sir. That is already being planned
Oh,
because we
great,
were
wonderful.
aware that we would be receiving a lot of FAQs. Some are already in
That's okay,
pipeline.
but some
many
FAQs we already have, but many FAQs,
Yes.
many questions we'll be getting today it's also.
Sure, sir. Sure.
Great.
Amit, any views? I believe Amit is not there. Okay. So going ahead. So type of disclosures. So comprehensive all disclosures, limited disclosures. So specific transaction wise, there are certain exemptions. So para A, all disclosures forms part of limited disclosures. B1, all disclosures forms part of the limited disclosures. Then specific transaction based disclosures, there are certain exemptions. Minimum disclosures, A2, A1, A2, A4, A5, and B1. These are the only disclosures that is required. Basic details, relationship, details of previous transactions, amount of proposed transaction, and basic details about the proposed transaction. So minimum disclosure is as the title suggests, these are the minimumist disclosure that is required. Limited is some less than comprehensive, and comprehensive is complete. Now, standards on definition, it says all the words have to be read in accordance with the LODR regulations, and words which are not defined in LODR regulations has to be reviewed in terms of the context of SEBI Act, Companies Act, depositories, similar the fashion in which the LODR defines the terms in it. Standard of minimum information. So how the minimum information is needed to be provided. So first, information all as per the comprehensive, limited and minimum disclosure, it is required to be placed before the audit committee. Then there is an additional requirement that there is a certificate which is required from a CEO, CFO, or any other KMP of the listed entity, and from every director of the listed entity who is also a promoter, to the effect that RPT entered are not prejudicial to the interest of the public shareholders, and terms and conditions of RPT are not unfavorable to the listed entity compared to the terms and conditions had similar transactions been entered into an unrelated party. Copy of valuation report or any other report which have been relied by the audit committee, by the management, that is being placed before the audit committee. Para 4 is clear. We have already discussed in terms of the information. Sir, why the specific need of certificate from CEO and CFO, and why from all the directors who are promoter? And there is a question. There was also a question that I believe this certificate from director of who is a promoter is required from every director, irrespective of the fact whether the transaction is proposed to be entered with a promoter or a promoter group.
Okay, the logic for this was what happened when the issue came that certificate from CEO, CFO. Then always this is happening that the sting is something else, and these people are bound to sign. So ultimately, promoter director can save all these things, and they can avoid this particular thing. So that's why it was decided that independent, the directors, those who are promoter director, they should sign this, that this is transaction. Now, very interesting, which you will see, we have covered that part. So the question came, somebody told there are two group of two promoter director, some group is not signing. Then what will happen? So that's why it was also carved out that if that, in case that is not signing, then management will inform to audit committee, and audit committee will note down this particular thing. And this came out because the transaction in the opinion of audit committee is good, but here the certificate restriction you have put in, so the transaction will not take place. So that's why the promoter director has to give certificate. But if somebody is not giving, some promoter director is not giving, then it is just meaningless.
Okay. So even if there is no such certificate, audit committee has to note the fact, and that fact also needs to be disclosed.
And Ankit, Jain Gupta has also come. Gupta sir, your comments, we will take it just on this subject, this aspects, that why this certificate of promoter director made it compulsory and the carve out also. Can you highlight certain things, sir?
I
Gupta,
believe,
His
sir.
audio is not connected.
okay, Ankit,
We'll come back to him, sir.
Yeah.
Yeah.
Okay. So, Ravichandran sir, Madan sir, anything you would like to add on this certificate? Yeah, JN sir is there.
Yeah.
Gupta sir, we are on the slides on the information to be placed before the audit committee. There is a discussion going on the certificate, that what is the need of this certificate, why this has been mandated. If you can share your views.
I couldn't hear you. Can you repeat?
Yeah,
please?
sir. So we are discussing the minimum information that needs to be placed before the audit committee, and that in that information there is a requirement of this certificate from the CEO, CFO, or KMP, and from every director of the who is a promoter director. So there is a question that why this certificate has been mandated, and specifically from the promoter director.
See, I'll tell you, you got to start from the beginning on all these issues. Let us understand that there is a lot of trust deficit between investor, companies, and regulator. And this trust deficit is the reason for all new regulations or all strict regulations that are coming. And this trust deficit originates from the conflicts that are there. When you are running a company, you as a promoter, you are supposed to think that you are also as one of the investor like other millions of investors who have no voice. But when your voice in the company becomes an all-important voice to get decisions done, then the trust deficit starts. Now, the issue that has arisen is very simple, that the question that I had put to Pawan, I had put into the subcommittee, and everywhere I still put in, that tell me one simple thing, that when you are doing a transaction with a non-related party, what are the information and confirmation you will seek from your CFO, CF, or managing director, whatever you may be. And since related party transaction requires a little bit more scrutiny, then that information that we require on a non-related party transaction has to be added with protection so that there is no abuse of related party transaction. All that is being directed for this. Now the question that has been all the time asked, sir, the audit committee is headed by independent director. Everything is done by outsourcing something. So I gave you two answers to this. One is simply that when you say valuation report, we all have seen what are the flaws of the valuation report and how the valuation reports get done. That is one. The second thing is this, I agree that audit committee is manned by auditors or independent directors. But the question that comes, that independence can never be guaranteed by legislation. That I tick box something. Independence is my personal trait, my character. And I give you a couple of examples on how the doubt gets into things. Only 2 days back, there has been issue on AGS, the transact company, where something has happened. Now, all the 4 independent directors have developed personal reasons for resignation either simultaneously. Now, how do you view this? Second thing is this, recently in Religare, for last 2 years, all the 4 or 5 independent directors were singing the same tune as Rashmi Saluja was singing. But when they realized that the tide was turning against them, then they started questioning Rashmi Saluja. So the issue is very clear. First, I have to create my own conduct which is not questionable. Then you question. Till such time, this gap will remain. And I can give you umpteen example. I will give you one example where one of the holding company was merging with the underlying company, subsidiary. holding company had only the asset in the form of shares of the underlying company. From the date of announcement of the meeting, the scheme, till the shareholder approval was obtained, they sold almost 1/3 equity of the underlying company and continued with the same ratio. Now tell me, is it not abuse or not? So the issue is this: we have to first come to a situation where investors trust me, investors say, okay, this is what is being done, I have full faith in XYZ. This gap has to be removed. And if it is not removed, we will continue having this webinar, other webinar, contradictory opinion. This is a very minute issue, micromanagement by SEBI, or what not you will be saying. But the fact will be this, that there are three parts in the triangle: SEBI, investors, and promoters. They are having various different opinions. And unless until we make it congruent, this will continue.
Thank you. Thank you, sir, for your views.
I think this answers majority of the questions, barring the technical questions.
So moving ahead, some of the other things, in case there are some information where comments based information indicate in case there are some information which is not applicable, audit committee can say and not applicable or nil. If audited financial statements of related party are unavailable for any financial year, the information that needs to be given has to be certified. Like in case of partnership firms or other entities, audit financial statements are not mandatory. So the related party has to certify the financial details. If related party follows a different financial year, then this matter also needs to be disclosed before the audit committee. And in case of payment of royalty, management fees, service fees, if any, they have to be explicitly bifurcated and disclosed to the audit committee, because at times aggregate amount is being presented. So separately, they have to disclose what constitutes royalty, what constitutes management fees, what constitutes service fees. Standards on minimum information to be provided to the shareholders. So all the information to the extent applicable as placed before the audit committee needs to be disclosed. So earlier there was a requirement that audit committee will give us a summary of the information that is presented before the audit committee will be presented to the shareholders. Now that concept of summary has been done away with. All the information that is presented to the audit committee for its decision making will have to be replicated to the shareholders. In case there are some information which is presented to the audit committee are of commercial sensitive nature, which affects competitive position of the company, the management, while giving that information to the shareholders, can redact that information with the approval of the audit committee. And this fact will be mentioned that certain information has not been disclosed, and considering the reasons of being commercially sensitive, or they might affect the competitive position. Then a justification has to be given why the proposed transaction is in nature of the listed, is in the interest of the listed entity. Statement of assessment by the audit committee that all relevant disclosures were placed. They have determined that the promoters will not benefit from the RPT at the expense of the public shareholders. Disclose the fact that audit committee had reviewed the certificate provided by the CEO, CFO, or the KMP, and the directors, which are promoter directors. Copy evaluation report, other report which have been denied, which is already there. Or in case there is a requirement of a subject where there is a need of asking for bids, the committee must disclose that it has reviewed bids from unrelated parties. If no bids were called for, then why this process was followed. If no comparable bids exist, then why, on the basis of what basis the committee is recommending the resolution, and they feel that it is in the benefit of the shareholders. Any additional comment of the audit committee or the board, or any other information. So all these information will now be required to be provided by the committee to the management, to the shareholders. So, sir, one of the information we feedback that we received from various clients and other things is that while a lot of information will be placed before the audit committee, ultimately the independent decision making has to be taken by them. Are we not putting so much responsibilities on the shoulders of the independent directors, because everything they have to certify at the end of the day? Will independent directors will be comfortable in joining the audit committee when such huge responsibilities are being casted on them? So, sir, Gupta sir, you can share views, and then I will also take it from Pavan sir.
I will give a very simple example. in your organization, when a new employee joins, he gets exposed to the company in 10 days, 15 days, and 30 days. And you give responsibility to that person. Now, does that person say, oh God, there is so much responsibility on me when he's just 21, 22-year-old boy or girl? Independent directors are not novice. They are not born yesterday. Most of them have got 30 to 40 years experience behind them. It is only because of the cleverness that they have, experience that they have, the capability that they have you have put into that position. Now, after being put into that position, they say that, oh, we are not qualified to do something, or we are not that. That is why we say the time commitment has to be rational. I cannot bite more than what I can chew. The issue is very simply that gone are the days when you thought that independent director's job was like an afternoon golf game post-retirement, where you can walk leisurely, put hair there, something, and come back home. No, it is no more that. It is no more Kaju Kishmish meeting. It is a meeting where you got to slog and ensure that you are playing the role. Unfortunately, still this thing has to seep into the mind. And I give you a very simple example again. All independent directors are crying that, oh, lot many pressure, lot many risk and everything. How many independent directors have resigned in past because of the workload? There have been resignation, but resignation are because I was getting a company which is in the Nifty 100 company. So I resigned from Nifty 500 company and moved to Nifty 100 company. Or I went to a company where my remuneration is more, or I went to a company where I was more comfortable. So all that has happened only in last 12 years. If you look at resignation, maximum 10 resignation would be there because they find there is something problem in that. All the resignation happened because of personal reasons, which I said something wrong in the company. I don't want to own the responsibility and I resign. So let us look in ourselves what is the problem rather than crying foul over everything else.
Thank you. Pavan sir, your views?
This particular thing has come out because what happened, everybody was asking that the SEBI is asking entire information I should give to the shareholders and or audit committee. So audit committee, you have to give all information. There's no question on this. But some information people were worried about the going to the competitor's end. That's why they mentioned the audit committee may approve reduction of the commercial sensitive information from disclosure. So suppose you have got a valuation report. In the valuation report, you have provided all information that what is my USP, what is my KPI, all other things. But these things are price sensitive. These things are competitive in nature. People compete and understand. So that's why SEBI gave this carve out that you can tell audit committee, an audit committee can decide, and then on the basis of commercial sensitivity, they can reduce that information without losing the substance of the other information. So that is one. Second is, they mentioned that you have to justify why this transaction in the interest of listed company. Now this is happening. You are doing transaction and you are saying I have done on arm's length. You have seen nowhere the arm's length word has come in the entire standard.
Yes.
Because the definition of arm's length is very vague and very confusing, and people say in one statement it is arm's length. So that's why they have removed and they have substituted with this that you have to tell audit committee how this transaction is interesting for the listed company. And then statement of assessment also by audit committee, they will say, because tomorrow what is happening, audit committee will say, I got only this information, so I decided. No, if audit committee thinks that the information is not complete, we require more information, we want to take a judgment on the basis of entirety, then audit committee can ask any other information and they can determine that it will not benefit promoters at the cost of public shareholder. Now here very interestingly you understand the word public shareholder mean other than promoter. So people should not confuse that at the cost of public shareholder you are giving benefit to the promoter director. So these are the four things minimum information provided for shareholder consideration RPT audit committee will do.
Okay.
I will add one thing.
Yes,
See,
sir.
the emphasis was that because the law requires and the regulation requires that I should justify that the transaction is really on arm's length basis. Now, arm's length basis have two connotations. One is the legal, what tax says. There are 100 ways to satisfy the tax people. But the other more important factor is this arm's length from the governance perspective or not? And the regulation or circular wants to ensure that arm's length is from the governance angle as well. It is not purely satisfying the third Transfer of Property Act or Income Tax Act or Transfer Pricing Act. No, we don't want that only. We want audit committee's sincere opinion that what they feel about the transaction. The only thing I always say, they have to ask the question, what if they were the public shareholder and not under influence of promoter or the board, or they were not independent director, how they would have viewed this transaction as an independent person? And if every independent director starts thinking or evaluating a transaction from that perspective, probably proxy advisors will have no role to play.
Thank you. Thank you, sir. Thanks for that insight.
On this,
Yes, sir.
whether a transaction, whenever a company is entering into a transaction, related party transaction, if the management says that management is not aware whether the transaction is in the ordinary course of business or not, or the transaction is at arm's length or not, I'm not in agreement with that management. Everybody knows it very well. Only thing is that whether you want to disclose something or whether you want to conceal something. That's all.
Thank you. So going forward, now we'll discuss the information that is required. So I've shared this slide in the beginning in terms of how the information is distributed in the tabular format. A, which is about related party and the previous transactions and some of the proposed transactions, and then B1, specific information, general information about the transaction, and that certain additional information considering the nature of the transaction. That there are 7 heads that have been outlined. So I'll run through in terms of all what are required. In terms of basic details, the name of the related party, country of incorporation, nature of business, forms part of both comprehensive limited minimum information. I don't think there is any issue. Relationship and ownership of the related party. So first, relationship between the listed entity and subsidiary and the related party. So you have to disclose the nature. Then shareholding or contribution percentage or profit or loss sharing percentage of the listed entity or the subsidiary, whether direct or indirect in the related party. So direct or indirect, shareholding, contribution percentage, profit and sharing, all these concepts have been used, considering the fact that it might not be a body corporate, it might be a firm, a proprietorship firm, partnership firm, or trust, any other thing. So I believe all these nomenclatures have been used. And then shareholding of the related party, vice versa, whether direct or direct in the listed entity or the subsidiary. So first is the relationship, then the interest of the listed entity or its subsidiary, considering the nature of the transaction in the related party, and then vice versa, the shareholding of the related party in the listed entity. Holding is being used because listed entity or subsidiary will be in form of a corporate. So there will be share capital. So that is why only the shareholding have been used. All these information forms part of both comprehensive, limited and minimum disclosures. Then financial information about the parties, standalone turnover of the related party for 3 financial years, standalone net worth, standalone net profits. These all needs to be based on audited financial statements. If audited financial statement is not available, needs to be certified by the related party as mentioned in the instructions. Forms part of comprehensive and limited disclosures, need not to be disclosed in case of a minimum disclosure, that is the residual transactions.
Ankit,
Yeah.
The one very important point is financial performance of the related party. So why this has come? Because they want to see turnover of the related party of each three finance. What is happening? You have heard that company has no business and you have done transaction. So there is a company which is which has formed recently, or you are saying that this company is a very good and they can provide. So that's why they want to see the health of the company, the standing of the company, and how much uh, profit and loss they are doing. So the turnover is 100 rupees and profit is 10 rupees. And then you can write anything, the 10% profit is company is earning. So all these things you can manipulate on this. So that's why they have come out with this.
Okay.
And
I
one,
will,
Yeah.
I will add something here. Why it is very important. We have a case where one of the metal company in India, their parents had a mine somewhere, and this company in India gave advance for buying ore from that company outside India, notwithstanding that the company was in a very bad financial shape. 1 year, 2 year down the line, the company closed down. So they had to write off the advance in the books. And the auditors or the audit committee did not object to the advance initially because this company was buying ore from many sources. But it was only the related party which was being given the advance. So it very clearly shows that you are aware and not taking any action. Similarly, in one of the company, the royalty is being paid in advance at the beginning of the year based on future turnover. Now, audit committee approves this. Now, what do we say as investor on the behavior of the thing? That is why the law has to become stricter.
Thank you, sir. Thank you. Now, going ahead, previous transactions. So you are also required to give historical perspective in terms of total amount of transactions which an entity has entered with the related party in each of the 3 financial years. Total amount of all transactions undertaken by the listed entity or subsidiary during the current financial year till the date of the approval of the audit committee. In case there are transactions which have been entered previously, whether the prior approval was taken, and any default, if any, made by the related party concerning any obligation undertaken by it under a transaction or arrangement entered into it by with the listed entity or subsidiary during the last 3 years. So the last is I believe throws more light in terms of how the related party has performed in towards its obligations that it has entered into with the company. So the audit committee on the shareholders can also judge whether in terms of the previous transactions that have been entered, it has lived up to the expectation and were able to duly perform what all obligations have been casted.
yeah. So Ankit, this last point is very important. Everybody should understand what is happening, that you have given some loan to the related party and it has defaulted. So today you are giving and you are showing that this is a company which is doing well, but in the previous time they have defaulted. So that's why they want to see what was the performance of the previous transaction which they have undertaken. So that's why they have come out with this.
Okay. Now coming to B1, which is talking about the transaction. So
Okay,
A to A5.
B5 is also amount to proposed transaction.
Okay, amount of the proposed transaction. So the total amount of proposed transaction being placed, whether the proposed transaction taken together with all the transactions will be material RPT. Value of the proposed transaction as a percentage of the listed entity's annual consolidated turnover for the immediate preceding financial year. Value of the proposed transaction as a percentage of the subsidiary's annual standalone turnover for immediate preceding year in case it is with the subsidiary. And value of the proposed transaction as a percentage of the related party's annual standalone turnover for the immediately preceding year. So the proposed percentage as transactions value as a percentage of turnover is to give a sense in terms of how big is the transaction when you compare with the previous year transaction. So both sides of the information have been sought. Comparison with the turnover of the listed entity or its subsidiary, as the case may be, and the turnover of the related party. So from the related party's turnover perspective also, the committee get a sense as to, for example, if the related party's 100% turnover is from the company itself. So the entire business is coming from the listed entity only. So that can give some sort of understanding to the committee and the shareholder as to the entire related party's existence is on the listed entity itself. So all these information will be able to give that kind of perspective to the audit committee and the shareholders required in all three comprehensive, limited and minimum disclosures. Then now coming to B1, which is respect to the proposed transaction. Yes, sir.
So friends, the A portion A up to A5, that is talking about the related party. Who is this? What is their business? What is the turnover? What are the things? So this is talking about the strength and weakness of the related party. Now come to the transaction of this transaction which we are doing. So this is proposed transaction which they are suggesting, that is talking about. So don't confuse with this. This A part is about the facts and figures of the related party vis-a-vis the listed entity.
Yes,
But
and
now,
yes, and in A5, if 5 transactions are being placed before the audit committee with the same related party, in terms of quantum, details of all 5 will come in this table, and then from B1 onwards, specific details of each transaction will be provided to the committee.
So now they want to do transaction, say transaction royalty. So this is common for all, but specific to royalty, other thing will come. So this B1, every transaction of from B2 to B8 will separately and combinedly here will come.
In terms of the specific transaction, general information about that transaction, details of the transaction, tenure, timelines, in case of omnibus approval, specific information, whether RPT is proposed to be entered is prejudicial to the interest of public shareholders, justification for entering into the RPT, details of promoter, directors, KMPs, interest, details of shareholding of directors or KMPs, copy of valuation report. So here, details about the transactions and specific details about the interest of the promoter, directors of the KMP of the related entity, and other way around, KMP and partners of the related party in the listed entity have been asked under B1. Then going to B2, then it starts asking specific information about specific transactions. So like in case of transactions involving sale, purchase of supply of goods and services, it requires the details of the bidders from where the quotations have been obtained. Process has also been outlined. You cannot just tell the committee that these are the 3 bids I have obtained. You have to also tell them how you have obtained the bids. Have you issued any tender? It's a private bid that you have called for. Details of the bid, the potential additional costs or potential loss to the listed entity in transaction with the related party. If it is less than to the best bid, that you have to outline the justification. In case the bids are not invited, then you have to give a justification. In case comparable bids are not available, then what is the basis the audit committee is recommending the transaction as in the beneficial for the shareholder. So bids, the process have to be outlined. In case you are going ahead with a related party, in spite of his bid not having the best bid, then the reason for going ahead, what is the potential loss, where bids are not outlined, asked for the reason. If comparable bids are not available, then the audit committee has to recommend that why the transaction is beneficial to the shareholders.
Okay, Ankit.
Yes, sir.
KSR, you also highlight on this. Now, this bid issue is also very cumbersome, and everybody was raising this point. So, what if you see this? They are saying, even if you are not getting a bid, even if you are not taking bid, you give the logic that why you have not taken. Even if the 3 bids are not available, you show that why 3 bids are not there and why people are not there. So they are not restricting anything. They are saying just disclose this, and the logic you give it to. KSR, you want to add, because this is the one question which everybody was perturbed.
See, first of all, this is with respect to sale and purchase and supply of goods and services, and therefore something is coming. Access to device is blocked.
You are audible. Sir, you are audible.
Yes, I am saying that this is only with respect to B2, which is sale, purchase or supply of goods or services. Number 2 is indirectly, it is suggesting that there must be a proper evaluation of the terms, because if you look at the certificate to be provided in para number para number 3 to clause 2, certificates from CEO or CFO or any other KMP of the listed entity and from the director who is a promoter director shall be to the effect that the terms and conditions of the RPT are not unfavorable to the listed entity compared to the terms and conditions had similar transaction been entered into with an unrelated party, which is a fundamental requirement to provide it, and consistent with that only in B1 itself justification has to be provided, and in explanation to shareholders statement of assessment of the audit committee has to be provided. Therefore, when it is a routine transaction for buying goods and materials and availing services in bulk, for example, a banking company may be requiring a core banking solution or any other solution, then there are so many vendors in the market in domestic as well as global. So they have to procure it with a proper bidding system. And if the bids could not be solicited, bids could not be availed, then also doesn't mean company cannot enter into transaction. All that the management have to be saying is, we have not invited bids. Reason is, this is the only source. Reason is, this is how it happened. Justification shall be provided. And then comparable bids are not available, then the management owes the additional burden of what is the basis of recommending to the audit committee is RPT, that is proposed RPT, beneficial to the shareholders. I will read it as public shareholders in other sense, but that is the logic behind this. It is not a cumbersome process in my opinion, because bids are generally invited for the purposes of a market price and a competitive price. So in a way, it promotes competition in the market, and in a way, it dissuades the tendency of any management to favor a related party at the cost of the public shareholders, at the cost of the company. That's all.
Thank you for that insight, and I think makes sense. But sir, believe process will be little cumbersome because a lot of transactions entered with respect to goods and services. So I think companies also need to create some kind of SOPs to ensure that there is a standardization and process and they have the bids.
Can I add something here?
Yes, sir.
Ankit?
Yes, sir.
See, I personally do not believe in bid system for the simple reason we all know how bids are arranged. If you ask me to arrange 5 bids, I will ask Pawan to send 1 bid, Mr. Madan to send 1 bid, and all other things. We'll have 5 bids and we'll say, okay, Ankit is the winner. That is the fact of life. That is how we have seen that there is a company which ran the transparent bid process using one of the big 4. And in both the times, the winner was the company itself. Okay. So that is how it is managed. But why this has come is very simple, because I as an investor would not know what has happened in the bid process. But people in the audit committee will certainly have knowledge that how the bids have been arranged. That is why the responsibility has been put.
Thank you, sir. So going forward, we have to run up because we have received more than 80 queries. So I'll quickly run up. Now coming to loan intercorporate deposits and advances. So I believe in terms of advances, it is from the standard, it is clear that advances is not only in the nature of loans. All kinds of advances are covered in this definition. It says sources of funds, whether any financial indebtedness is incurred. So you have to give the details of that in indebtedness, material covenants of the proposed transaction, interest rate charged on loan, intercorporate deposit or advances in last 3 financial year to any party, whether it's a related party or not. So both have to give it to any other party, to a related party. Interest rate at which related party borrows or could borrow money based on its credits and financial position, and interest rate at which the listed entity or subsidiary borrows or could borrow money. So depending upon my capacity to borrow, you will also determine how well would be the right interest rate that would be charged on that loan. And then you also look into the capacity of the related party in terms of at what rate the related party is borrowing from the market when other participants. Similarly, interest rate charge previous in 3 financial year will from party, related party and otherwise will also give a good understanding in terms of how the company's rates are being charged. And then they can compare it with the proposed rate that is being charged with the related party in terms of the loan or intercorporate deposit transaction that is proposed. Required in case of both comprehensive and limited information. Moving forward, other information is also there. Yes, sir.
You can.
Sir, we have to actually, we have received many queries.
84 questions.
Yes, so we have to also take them.
Okay.
So in terms of then additional information, proposed rate, interest rate, maturity, repayment schedule, secured, unsecured, all basic information. Yes, sir.
My take is that you please go through this PPT fully. Don't be in a hurry. Questions can be taken later on as we discussed in the beginning through.
Sure, sir.
Yeah, it's not necessary to take all the questions. Not
Ankit, one more, Madan, one more question which GN Gupta sir will also, because some question which people have asked, that is a question of policy. Okay, which as a member of the committee, we can't give answer. Neither GN Gupta ji, me and Ravi and you can give answer. Because some questions are really tricky, which people are asking, and it is a policy decision. So that rider I am giving, that we will not give all answer, but the way I'm seeing the questions, it means there are multiple things. So we may organize this program again with the calling of SEBI officials and sharing these questions which has come, and then we can take a call on this particular thing. So everybody should be very clear.
You can distinguish the question in two parts. One is a technical question where you can provide clarity. Another is a justification. On justification, certainly Ms. Jane Gupta has already very beautifully given the justification of the standard also. So that certainly we cannot answer on the justification. And third question, Ankit, which is very common, I can see a number of people have asked this question, that is on the applicability of the standard with effect of April 2025.
Yeah.
I think, Pawanji, when we provided in our SS also, if I remember, that SS will be applicable to all the meetings which shall be held, the notice in respect of which shall be issued on or after 1st of July 2015.
Yes.
So I think same clarity should be provided here also, whether it will be applicable to all the approvals on or after 1st April 2025 or on all the transactions to be entered into after 1st April 2025. That clarity.
Sir, if you read the language of the circular, it says that the amendment to the master circular will happen on 1st April 2025.
Right.
So all transactions which will be placed before the audit committee or shareholders after that date should actually be needing this disclosure. But I think if SEBI has a different view, because most of the omnibus approval will go.
Still needed. Yeah.
Omnibus approval will go beforehand.
Ask a question that is omnibus approval is already there.
Yes.
For 25-26. Should we take the approval again? Whether standard is applicable or not?
Yes, we are also receiving similar queries. So coming on to the loan and interest.
You see omnibus approval also. Even
Ankit, I will clarify here one thing.
Yes, sir.
That it is irrational to think that whatever has already been approved by the shareholder needs a re-approval. But we may have to confirm from the SEBI. The second thing is this. After this seminar, I fear that there will be flood of approval of related party transaction before 31st March because people will not want to give. I am giving my opinion that regardless of the law, we will be as a proxy advisory firm will evaluate the transaction based on the information that is prescribed in the circular, whether law is there or not.
Okay, sir. I think that is right, because many material shareholders approval will go. So
yeah, Ravi is saying something.
Yes, sir.
I wanted to impress upon this point that the regulation 23 itself, even for omnibus approval category, there is a quarterly review requirement. So audit committee cannot be suddenly finding some review time, several information which was not there at the time when it approved. So the audit committee would probably require, even for omnibus approval, which normally takes place in the month of March itself, the whole of the information tomorrow after first quarter, we should not be shocking with some other information. This must be the practical understanding in my opinion.
Okay, sir. So going ahead in terms of the information, latest credit rating, total amount of total borrowings of the related party over last 3 financial years, interest rate paid on the borrowings by related party during from any party, not only with respect to the listed entity, any party in last 3 financial years, and default in relation to borrowings. And there is a justification if there is a default, why audit committee is still going ahead with the approval of the transaction. So all these information, 16 points are required in case of a transaction with respect to loan, intercorporate deposits or advances, including in case of advances, there is a additional information, breakup and the percentage. Sir, on the breakup, you can add, I believe you had a
Ankit, just go back. Just go back.
Yeah.
No, go back. Yeah. So just next slide. Next slide. Yeah, see if 11, point number 11. No, go back. Point number 11, if secured, the nature of security and security coverage ratio. Now, this is also added new. So sometimes what is happening, you are saying securities house, security land, or you are saying land security of say 500 crore or 200 crore. So one coverage ratio is also mentioned because you are giving loan of 1000 crore and you are getting 100 crore rupees property, in only 10% is coverage. So that is also. And next point, which Ankit, next point. Now what happened? There is a clause, loans and advances. So, and this is coming as a under one head. So there was a issue of the meeting when people were asking about the advance we are giving for security deposit, for rent, for something, and this is for short term. So how to do it? So SEBI said that biggest problem is coming from this type of advance, which is not the balance sheet item or which is normal advance. So that's why they have added advance given. You just write down the nature of the advance, security deposit, trade credit, or any other thing. What is the amount? So sometimes what is happening that they are taking a loan of 100 crore, but giving advance of 800 crore. So that is one part. So that's why advance given, amount and duration of advance given, they have added, and percentage of total loan given preceding 12 months. So this is also added in this. So you should not take advantage of advance heading for some other purpose.
So moving ahead, now coming to the B4 investment. So it talks about sources of funds, purpose for which the funds will be utilized, financial indebtedness similar to loans, material covenants, credit rating, basically in case of debt instruments, expected annualized return basis the investment, return on past investment in the related party in case earlier investment is there, what was the return, asset liability mismatch position of the company, because when you give the loan, how it will affect the asset liability mismatch position or investment. Any regulatory approval is required. All these information are required in case of transaction with respect to investment. Any sir view?
Now this is okay. This is because
this is fine.
Yeah, this is they want to know whether you earlier you have given investment, you got any return or not. Now you are startup again. You are giving Gupta ji, any point, any type of things you have observed.
It will be very difficult for me to give you offhand, but we have issues where the loans and advances have been given, they were kept on giving, but nothing comes out. And I already gave an example of advance for the ore purchase, which was given to related party, which has to be written off. So only thing that we got to guard is such things where things are happening, not that you are doing it to other parties, but you are doing it to related party only. So, but it will be very difficult for me to often give you few examples other than that.
Okay.
So moving forward, coming to guarantee comfort letter. So rationale for giving guarantee, you have to identify the rationale, material covenants, specify the obligation guaranteed, the amount of exposure, the quantum, credit rating of the related party, details of the solvency status and going concern status of the related party during the last financial year to judge the credit worthiness and probability of a default in times to come. Default on borrowings, if any, over the last 3 financial years by the related party from the listed entity or any other person. So all these disclosures are required in case any guarantee, excluding performance guarantee, surety, indemnity, or a comfort letter. So even in case of a comfort letter, all these requirements will trigger.
No, Ankit, the basic simple point that you are giving any type of guarantee and that liability is coming to you, what is the protection and what is the coverage. So now you have seen Madan is their personal guarantee people are giving, and now they are going for insolvency. And the Supreme Court has also approved that in case you are not getting money from the original company, you can go to the guarantor. So that type of things you are giving, you are going. It's just like a loan. It's not a paper document. And these information are not coming in detail relating to the balance sheets. Madan can add on this.
I agree with you.
So that's why they are asking solvency ratio also, that how the company has done, violation, the default and everything.
Okay, now coming to borrowings. Similarly, material covenants, interest rate, cost of borrowing, due date, repayment, secured, unsecured, debt to equity ratio of the listed entity or the subsidiary, debt service coverage ratio of the listed entity or subsidiary where it is borrowing from a related party, before and after the transaction in both the cases. So all these information will be required in case of a borrowing. In case of a sale, lease of disposal of assets, similarly bidding has to be done where there is a disposal of asset or lease or sale. A bidding mechanism has been provided similar to the case of sale or purchase of services and or goods. A lot of information have also been asked in terms of financial track record of the subsidiary undertaking that is being sold, expected financial impact on consolidated turnover, net worth, similar sale in last 12 months, what kind of consideration is being received, whether the transaction result in eliminating a segment reporting by a listed entity, does it involve transfer of key tangible assets or key customers. I believe some of the information is coming from a sense basis the Linde case that was there, where SEBI had a view that a certain business opportunity is being transferred and it has to be approved by the shareholders considering that as a related party. So some of the questions are, I believe, on these headlines. So a lot of information have been asked in case of sale, disposal, or lease of asset, unit or division or undertaking or of shares. Sir, your views, and we can also take the views of Gupta ji and yes, sir, Madan
Gupta sir, your view.
You're asking my view?
Yes,
Yeah.
sir.
See, I have already talked about all these things issued. Which one you are asking again? Can you, because
sir,
there
on
are
the
two...
sale, disposal, or information on sale, lease or disposal of assets or division of undertaking.
Okay, in the sale and disposal, again, the issue is very simple. It is a related party transaction like any other related party transaction. And shareholders really want to know that why you're selling. And we have seen many a times that when the sale or disposal proposal comes, the shareholders are not even told in many cases that what is going to be the impact and what is it which we are selling. We, as you see, in many demerger and merger transaction, on one time when you are demerging, you say that you want a valuation for different verticals differently. After a couple of years, you merge again, you say that it will be value accretive, it will be consolidating the in one entity. So when you give answers or logic by convenience, the shareholder really looking for answers which are convincing, not convenience.
Okay, Pawan sir.
Ankit, my point only in this, they are just saying there is an interesting word lease here. And sometimes what is happening, the companies are buying property, say 800, 500 crore, and then giving to RPT, related party, to lease. So that's why if you read this, the lease is coming a balance, a profit and loss item. But for this particular standard, the lease will be treated as balance sheet item because behind this is happening. So that's why they have mentioned that disclosure should not be limited, it should be comprehensive. So that is one part. And entire transaction which is happening with the with the other party, what is the result? Sometimes what is happening, you are doing transaction eliminating a segment reporting. That is also another point. And sometimes you are transferring a intangible asset or key customer which is not in the balance sheet, and you are transferring critical for the common continued business basis. Suppose you have a brand and the brand there's no valuation, and now we are transferring to this, but the company as a whole identified with the brand. So that's why the sale, lease, and disposal of asset or unit division undertaking or disposal of shares, everything is covered in this.
I will add something, and you will understand very clearly where it is coming from. Recently, we had a transaction where one large steel company was making a slurry pipeline for transferring iron ore from their own mines to their plant. What they have proposed, that they are selling half complete slurry pipeline to their sister concern and selling it at a price, at the cost of valuation, whatever it may be, 1,500 crore something, and leasing it back for 20 years or 30 years at a price which is 80% of what is the cost that they are getting now. So if you look at it, an integral part of your operation, because slurry pipeline, iron ore is as integral to steel plant as blast furnaces, and you are hiving up to a third party, related party. The question is that if that party was not your related party, would you transfer the slurry pipeline? The answer is no. In that case, the transaction itself is vitiated because of other motives.
Okay.
Very importantly, I would prefer to give some attention to this serial number, 9, 10, 11, 12. They are asking very pertinent questions in B7.
Yes, sir.
Yes,
So,
yes.
any views on these questions, sir? 9, 10, 11? Because as I mentioned, sir also talked about eliminating competition or some segment. There is a case also. So I think that is something which propelled all these disclosure.
Definitely, it is very, very valid questions in view of the several experiences we have seen in several companies. The disposal of assets, which is a balance sheet item, like division or undertaking, whether through demerger or otherwise, that should not be intended to benefit somebody at the cost of the public shareholders. Therefore, certain specific questions have also been included in this is a hallmark of B7.
Thank you. Going ahead with the last one, that is the payment of royalty.
On this,
Yes, sir.
in your previous slide also, there was an item of bids.
Yes, sir.
J.N. Gupta sir also talked about how the bids are to be obtained. Let me share with you that IBBI is now coming ahead with effect from 1st of April 2025. All the assets under auction shall be sold through one platform only, that is EB Cray. They have tied up, whether they're having stake or not, I don't know, but they're tied up with the platform, and all the auction will be through that platform only. So there will be complete transparency. So if the same platform or similar platform can be used for this purpose, for the purpose of price discovery, because the management knows that we have to sell it to the related party. But at least from the point of view of price discovery, such mechanism, such platform can be used.
No, I think this is a good suggestion, and Guptaji recently has tied up with SEBI relating to RPT portal, so they can use this. Guptaji?
Yeah, I will say something. What happens when you very well know that the transaction is not going to happen with me? You are not going to give a price. Very simply, you go to the market, and everybody knows that I will always end up doing a transaction with Madan. Then Pawan will never give a quotation to me. Ankit will never participate in that transparent manner. So the problem is genuine, because if I am really wanting to a related party transaction, why somebody will come? So that's why we always have to arrange the bids which are related party bids by paying something here and there. Okay, come and give it. So it is an extremely difficult situation.
But so this is the problem. We need to come out with a solution, sir. Some solution has to be.
So the
Every problem has a
very
solution, sir.
solution is very simple. The audit committee will say this is the reason the bids could not be invited, bids could not be shared, but we have satisfied with this method that this is a fair transaction. Audit committee has to stick its neck out. You can't get protection for everything and saying everything is hunky-dory. And I will tell you, has anybody acknowledged till now that my related party transaction was biased? Nobody has done. And do we say that all related party transactions have been fair? Certainly not.
So these have been problem. That is why the standard has come to bring out a solution to these problems.
So that is why this is the beginning. Let us see what happens in future.
Yeah.
You can't dismiss this today that it is not going to be successful. Let us see. Explore.
Okay, going ahead with the last one, that is the royalty, and also a very detailed one. So it asks the gross amount of royalty being paid by the listed entity or the subsidiary to the concerned related party in 3 financial years. Purpose of royalty, royalty vis-a-vis dividend, net profit of previous financial years, with the dividend proposed to be paid during the year, rate at which royalty has been increased in the past 5 years. In case of new technology, first year of technology transfer, benefits to be derived, technology imported, details of in-house research and development. I think that is very important, that whether the company continuously is relying on imported technology or it is developing its own or not, what kind of percentage expenditure being spent. Royalty being paid to the parent company. Here we receive some queries, disclose royalty received by the parent company, where parent companies will be little apprehensive of sharing this information. Sunset clause, royalty paid, brands, peer comparison. I think one of the most important thing, that how other peers of yours are paying royalty. All these information is required in case of royalty payment. It also outlines in what cases how the peers have to be determined. So that guideline is also there in the standards. But this is one of the most comprehensive information that is being sought, is under the head of the payment of royalty. And in terms of my discussion with sir also, that there are also a lot of issues with SEBI on this aspect of royalty payment. There is also a note that SEBI has published last year, in, I think, consonance with the proxy advisors, on a survey have been undertaken on how royalty payments are being made to the promoters and other related entities, and what kind of percentages are being there. So I believe SEBI definitely is looking at this as something which very utmost importance, and want the comprehensive disclosures to be there in case of payment related to royalty. So I think Jain sir can share his views based on the survey that they have also done along with
Will tell you the
SEBI, and
idea
then
behind
Pawan sir
all
and others will add.
Idea behind all the disclosure is this. I am reminded of movie Mother India, where the money lender used to take most of the grains and the farmer had nothing to eat. So we want to know that when the royalty is being paid, is there anything left for the investor or not? Whether the royalty rates are fair or not, whether you are differentiating between one subsidiary versus other subsidiary, and how long that royalty will last. It is like this: when you used to borrow in olden days from the money lender, the farmer would never be able to pay the debt. So same here, that what is the technology that you have given to me, for which I am paying perpetually, where it costed you 100, you have already recovered 1,000 from me, but still continue to do this. So all these things were relevant questions which were considered, which we have been raising from last 10 years on the issue. And I'm happy that all these things have come into picture now.
Okay, Jain sir.
KSR sir, Pawan sir.
Yeah, KSR, you just tell, then I will tell.
KSR sir.
Yeah, the most important aspect of this whole disclosure requirement is contained in providing the sunset clause, as well as the requirement to provide specifically whether any in-house R&D information undertaken by the company, research and development programs, which ultimately will reduce or eliminate the royalty currently paid for any technology and technical know-how. Additionally, the absolute value of R&D expenditure. So if you look at this particular thing in serial number 83, it's a very, very progressive statement. And I remember we have to be reminding ourselves that gone are those days when India is technologically dependent. So therefore, there is a word of caution as well as word of, I can say, assurance coming from this requirement of disclosure.
Thank you, sir. Pawan sir.
Okay. Now, this royalty issue is very, very serious. And Gupta ji and KSR has mentioned about this. So what happened? The thought of SEBI was, what is a sunset clause? So SEBI was saying that you are paying royalty to your parent company up to what time? How many years? And if you are paying royalty, then what that royalty is giving any advantage to the company? It is increasing its profit, turnover, and there is a technological changes. So you have given royalty, like say example I am just telling, you got a pager technology and you are paying royalty on the pager. Now pager has gone out, mobile has come, some now iPhone has come, but you are still paying the royalty on the pager and saying that this is a royalty which you are paying. So they want to know what royalty is impacting business. Another thing was that you are paying royalty of say 100 CR, but you are paying dividend 10 crore rupees. So they want to see this also. You are paying royalty, say 500 crore. A net profit of the company is only 300 crore. So they want to understand when there's nothing moving, how you are doing. And then what is the rate on 5 years? Royalty was 10%, 11, 12, 13, 14, it is increasing. So the way you are increasing royalty, the profit and dividend is increasing or not. Then new technology. So what technology you are transferring, how it is moving. Next slide, sir, Ankit. Okay. Then there's a question in-house research which KSR has told. So SEBI has come out this point that you are giving royalty. Now the time has come, India is becoming self-reliant. So why you are not putting that efforts that in-house technology can replace the foreign technology which you are paying royalty? And suppose you are paying 100 crore royalty, why can't it come here? And up to how long you will give? So these all things has come. And then very interesting research SEBI has done with the I think Mr. Gupta, that they were seeing that in India, you are charging 8% royalty. But in Europe, you are charging 2%. And in another place, you are charging 3%. So they want to know what is minimum you are charging, what is maximum you are charging, what you are charging from India. So you can make the yardstick. And sunset clause, they are also mentioned that there should be some clause and every 5 years it should go for renewal. And then another question, sometimes people are doing the consolidated agreement for royalty, which include technology transfer, name, and various other things. So some of the corporate objected mentioned that we have a one particular agreement and we can't decide. So in this standard, it is mentioned that suppose you are paying 800 crore royalty in a consolidated agreement. So you can't bifurcate, no problem. But just you write, I am paying 800 crore for name, for logo use, for technology use, and this is equal to 800 crore. So that should also come. So this is the overall view which has come out, and that's why they want to see this, that how the royalty things is affecting in India. And they gave various examples that how people are manipulating and taking advantage of India's things. So I think this clause is connected majority of royalty. And somebody has asked this question also, whether it's the royalty of foreign. No. Any royalty you are paying to anybody. Even India, you are paying, the listed company is paying royalty to any company in India or abroad, and all will come.
Pradhan sir, any views? Okay, so sir, we are done with the presentation. So I'll take some of the questions.
No, Ankit, now I'll tell you.
So because 6 is already there.
No. That's why I'm saying there is a there are two, 3 point also. I think we have missed out the industry peer also. So
Sir, that was there.
So industry peer also, that explanation that listed entity will compare the royalty payment not only with the foreign countries where they are paying, but simultaneously they see the peer companies how much royalty they are paying. So 3 companies they will identify, and then interesting point came out that suppose 3 companies are not there. So this point came out with SEBI that in IPO, public issue, whatever happening, the research report or research analyst is always giving comparison of that this company is better than this. So they mentioned this also, that you identify 3 listed peer, international listed peer, or the normally research associate, research analyst registered with SEBI is identified you with that type of peer. Suppose you are not satisfied, you write this, or you are not finding 3, then you write that like Zomato came out with the issue, or Swiggy has come out. So they mentioned only that there's no peer available in India and no peer available in international also. So that's happened. So this is one part. Now, Ankit, we have received 90 questions. And these 90 questions,
Yes, sir.
now, in the 90 questions, there are various questions we have clarified during the discussion. Okay, because when they pose the question, and we have already answered through this and through the discussion. Now, in the some questions, they are principle or policy making questions, where we can't give any comment because we are not authorized, or we are not something. Though we have disclosed this, that we are the member, Mr. Gupta, Mr. Ravichandran, Madan, myself, we were the member. So people should not confuse, and people should not take it negatively or quote somewhere that a committee member has said this. This is the interpretation. So what I'm suggesting,
I will clarify one thing.
yeah.
Yes, sir.
All that we have spoken here, it is our individual opinion. It cannot be taken as a committee's opinion or on behalf of SEBI. When we are member of the committee, we have discussion, deliberation, and the consensus decision is taken. After that consensus decision, individual members' opinion do not matter. But for the discussion purpose here, we are speaking our mind, but it doesn't mean that we are having an opinion which is different than the committee's opinion.
Yeah. So that's why I'm giving a solution, sir, that I talked to SEBI just now when you were discussing. We should do the same webinar on question answer on RPT on next Friday, because it is applicable from first. And the way we have seen more than 800 people registered and 510 people, 520 people joined, it means this require a thorough discussion, thorough point. It's a part 1 of the program. Ankit has explained everything. We have explained. Now, more and more things should be clear that why it has come out. I will request all the participants that please send questions to us. Okay. So in the next webinar on Friday, we will have only question answer on RPT format. So this question, which we have received 90 questions, we will share with SEBI and invite them, and we will give answer of this. That will be the right approach. If we say something, it should not create any confusion. What do you say, Gupta sir, Ravi, and Madan?
I'm of the view that these are standards from the industry forum. So in addition to SEBI, you have representatives from industry forums also.
Okay, we will call. So in the next program, we will call industry people also, SEBI and the industry chamber also, and we will try to discuss the questions relating to this, and we will try to call some of the non-member of this committee also, so
Yes.
they can also raise, and let's have discussion on this part. So this 90 questions are with me. Okay, all these questions we will prepare, categorize, and then give answer, because 1st April is there. So let's prepare this. So law is there. If there are any query, any confusion, let's clear it. So people should follow perfectly.
And you may also invite questions from those who may be participating in the today who are not there and may be joining next time. You may invite from them also.
They can definitely pose the questions live.
Yeah.
Gupta sir, Ravichandran sir, you have any
Pawan,
view?
Pawan,
Yes,
I
sir.
have a little bit different opinion. If you are having a next webinar only for answering that question, then it would not be good to invite industry people, because then there will be further issues why this has been done, why it is not done. That is a separate discussion forum. It is the next webinar that you are proposing is only for clarification and hearing the SEBI's view. Because if we invite industry people, then I, as an affected party, will start saying that this is not correct, not correct. That could be another webinar.
So Gupta ji, what we'll do, we'll call SEBI and we will call some of the member of the committee, those who have specifically worked on this, and we will discuss. KSR.
I just wanted to add the same point that non-members shall not be added here now.
Okay, done. So let me just summarize. Yeah. So what we are doing, there are 92 questions, and some questions have come on mail also, and some question on the basis of this further will develop by our own research team. And I will request Ravi, Madan and Jain Gupta ji, and I will request our committee member also that after reading this, if there is any questions coming in their mind, please write to us. So we will compile this and we will request SEBI that clarify this and come out in the FAQ form, and along with this, they can publish. So first we will try to give answer, and 1 week is sufficient for SEBI also to take a view and finalize their point of view. So because I was reading various questions, which are really very good questions, very interesting questions, but some of the comments of the people, but some of the principal question where the policy decision is required. I can give answer, it should be, but people should not read it shall be. So because the chairman of the subcommittee has said so, this should be. So I don't want to do this. That's why I just want to request everyone, please have patience. Next week, we are organizing the same program on question answer. So all questions thread where we'll discuss the information, purpose, why it has happened. It is given to you. So it will be more clear and you can come out with more queries also. So that way, this is my plan. Yeah, Ankit.
Sure, sir. We can have this webinar next Friday.
May I add something? My personal view, that all those professionals who have joined today, majority of them might be thinking that it has added another compliance burden on them. But my message to them would be, no doubt there is additional compliance burden, but it is going to enhance their role and recognition also in their respective organizations.
Okay.
You know, once you start complying with it, you're going to be indispensable for your respective organization.
Okay, KSR, your view?
Yeah, it is good. We will have detailed and considered answers so that we get sufficient time to segregate it under various paragraphs and apply mind consistent with the forum and standards. We will be able to give a considered opinion.
Okay. Ankit?
Sir, chairman's view.
Chairman has already explained.
Okay.
Ankit, think in the chat box or Q&A wherever possible, if you can share the email ID as well as the mobile number where the WhatsApp messages can be sent and the people can send their queries. That will be actually handy for them.
Sir,
Okay, let
they
Paul
can
Ankit.
send it to shivam.singal, which goes along with all our webinars. shivam.singal@indiacb.com. We'll post that on the chat box, and they can send the email on that ID.
Okay, and Ankit, Shivam can share the poll also. Shivam, poll just skip. फिर कैसे आएगा? Ankit,
Shivam, are you running the?
Ankit, Shivam is just compiling this poll.
Okay.
2-3 minutes we require. Till the time, we will just, I'll tell this a very interesting point which has come out. Because whenever there is an issue, people were giving example of that I have to do 10,000 rupees RPT transaction and I have to show everything. So this point also came, why you are doing 10,000 rupees transaction with the RP, with the related party? What is the purpose? What is the things you will save and we will do? So SEBI's viewpoint is that they are not interested in RPT transaction. They are but they are not against also. And they are saying you disclose. So disclosure is important. You must disclose that what is happening and why it is happening and what is the data. So the point is, Ms. Gupta ji was mentioning, suppose you are doing that transaction with somebody and you are buying something, will you not check his credential? You are giving loan to somebody, third party, will you not check the credential that he has defaulted somewhere? So everything which you are doing with a third party, you should do. Second is, if you read this entire RPT format, they are covering two things. One is it should not be any advantage to the promoter or related party. Second is it should not be lost to the public shareholder or the company itself. So both way they have covered. And interestingly, the point is removed relating to what you say. Point is removed relating to arm's length. Yeah, Ankit, you just.
Yes, so first was the threshold criteria, whether it was appropriate. I think 57% has said no, and I think 226 participants participated, out of which majority of them said that it is correct, and some said 27% said it should be higher. Okay, next, Shivam. Do you agree with the bifurcation of the standards in terms of comprehensive, limited, minimum? 68% say yes. Okay, so that is an overwhelming affirmation to the disclosure in terms of the classification. Do you think the requirement to obtain certificate will improve governance? 70% say yes, 17% say no, 14% is not sure, so 31% around. Okay. So that were the some of the questions we asked as part of the poll.
But what is encouraging is that around 250 to 300 participants are participating in the poll.
And we have received 95 questions now.
Excellent.
And Ankit, Shivam, please share today's presentation to everyone. So,
yeah, so that goes across all to the participants along after the webinar is concluded. So we'll send them across.
Yeah, so friends, please read this presentation. You have given questions just now, but you prepare your own questions, give to your team. They can ask further question. If you can send it all questions to us on up to Tuesday, we will incorporate in the presentation and we will give the answer. It will be very useful, and this is a efforts for knowledge sharing, so it will be win-win for all.
So thank you, everybody. Thanks for joining in such good numbers. Thank you, Madan sir. Thank you, Ravichandran sir. Thank you, Gupta ji. And thanks, Pawan sir. And we'll meet again next Friday, same time, to discuss the questions and other issues arising out of these standards. And people from SEBI would be there. So till then, enjoy your weekend and remain safe. Thank you.
And thank you, Pawan, for your untiring efforts. Even after this issue of the circular, you have not calmed down.
We will make it law perfect. That's it
Great.
once again. Okay. Yeah.
Thank you, everybody.